Maybe it's in the gutter where I left my lover. What an expensive fate. My V is falling down.
What's up, guys? Alex here. What I wanted to go over today on this webinar is basically on a trading strategy that I trade, my own strategy, my own trading strategy. I would like to explain a few key points on what I look for in the market, and how I trade. So I'm just go right into it. Right, if you look at the chart, we're on a monthly chart. So I start with top-down analysis, go time frame by time frame. And this webinar specifically is going to go over price action patterns. So patterns that I look for are bullish engulfings, reversal pattern, and basically price squeeze patterns. Like descending triangles, ascending triangles, symmetrical triangles, breakout patterns, So we're gonna start off in a monthly chart. I'm gonna mark off some support and resistance, and we're gonna go over there. So we're gonna monthly wicks, basically, fair price. Then to find a median point, I'm just gonna draw my Fibonacci from top to bottom, and then find the middle point, which is always the 50%. Which is always the 50% of that zone. Then you can just do like, where is it? Is it right here? Nope. Give me a second. I'm kind of forgot where my stuff was. So it's from here to here is basically what we want to copy, right? Clone. And then we're going to get the next zone where price is going to be at right here. I don't have a specific way I do it. I just accumulated strategies over the years and added my own I guess taste to it. And so this is how I'm gonna trade. So yeah, we're just gonna go right into it and go from there. And we're just gonna do a line chart real quick, and you can see that price reverse perfectly right here, broke it, way down, found support, rejection, support, and it's kind of. So I'm just gonna mark off my chart, all of it. Okay. So I'm just gonna do my charts like this the whole entire way, top to bottom, top-down analysis.
I still have the egg salad. Yes, I shall have the egg salad. Here you go. Oh my! That looks delicious. You know what, Stormy?
Excuse my background. I got Elmo on for my kids. I do have kids. They're 1 year old. They're hurricanes, to say the least. 1 year olds. They're a handful, honestly, but I love them. So marking off the last zone. Xander. Stop touching that. I see you. So that's the end of it, I believe. Hopefully that's the end of it. Okay, this is on a monthly chart, and we just do this. All right, yeah, that's all of it. Is it 2, 3? No, it wasn't all of it. But so I'm just gonna do it again.
Okay, now it's time for the outfit.
I'm just gonna climb and add it to the bottom like that. Then to get that, it's just gonna do this. Press, did that right. Then add our fibs again and watch this. I'm kind of slow doing it because I want to be accurate. Accuracy is everything in trading. You see prices fail to break it. Okay. This is how I mark up my charts. Hey, excuse me one moment. Move. All right. So yeah, like I was saying, I'm gonna make this front. All right. So this is what I typically look for, these patterns. You can write them down. I'm gonna give you a minute, whoever watching this video, to write them down. A few more seconds. All right, that's enough time to write it down. If you didn't get it down, you rewatch this video on YouTube and get them there. All right, that's it. All right. So what I want to go over, starting off, the first pattern I would like to is a bullish engulfing. So bullish engulfing patterns. If you don't know candlestick patterns, a bullish engulfing basically engulfs the how I do candlestick analysis starts off with OHLC, which is open, high, low, close. So in a bullish engulfing, the bullish engulfing, let me see if I find one perfect example. Right here. This is perfect example right here, but this is an uptrend. You want to look for bullish engulfing. That's on the one. We're gonna go down one time frame, lower, to find a good bullish engulfing pattern. Bullish engulfing right here. Perfect. It broke the zone. They're all over the place. Right here. Okay. So in the uptrend, you only want to look for bullish engulfings, and morning stars. Write that down. In an uptrend, look for bullish engulfings and morning star patterns. Okay, write that down. In an uptrend, you only want to look for bullish engulfings and morning star patterns. Morning star patterns are, here go a bullish engulfing. I'm gonna highlight it right here. Perfect example. This candle right here. Darker, okay. Bullish engulfing right there. A morning star pattern. I've seen one before. Right here. Morning star pattern. Right here. Right here. Perfect morning star pattern. Morning star pattern. Morning star pattern. A bearish engulfing, a bullish. Is there a doji? A doji is valid also. But a bearish engulfing, indecision bar. It could be on support or whatever. And then the next thing, the bullish engulfing closes above or closes higher than the close of the bearish engulfing pattern previous. That is valid for a morning star reversal. It's on a higher time frame, the weekly chart. So 1 week, 2 weeks, 3 weeks. 3 weeks to form this pattern. And as you saw, if we did an entry from the retrace to the close of this candle, and it went up to about support. It's 135 pips, 132 pips from that. 132 pips, standard lot. That's $1,032. Simple risk management on a weekly chart. Higher time frame, stronger the trend. There you go. Bullish engulfings. It broke monthly. It broke a monthly level. It broke a monthly high point. That monthly candle. Okay, another thing I want to go over. Candlesticks and candlestick patterns. We'll be going over price patterns right now, but candlestick patterns, candlestick analysis specifically. Each candlestick on each time frame is an interval of that time frame. So on a monthly chart, this candlestick is basically a time interval of 1 month. 1 month is like 20 days in the market. Xavier moved. So let me get rid of this. I'm just gonna move it. Okay, 1 month, monthly time frame. Don't know this by now. Monthly. I'm gonna reiterate it one more time. Each candlestick on each chart time frame is one interval of that time frame. So monthly chart, one bullish candle equals 1 month. On a daily chart, one bullish candle equals 1 day on the market. Okay, so I'm like monthly, weekly is 1 week, that's 2 weeks, that's 3 weeks. You get it? Okay, there you go. If you don't get it, you can rewatch the video. All right. So like I was saying, I'm looking for bullish engulfings, and this right here was technically a downtrend, but since it closed above this previous week high, which was the close of it, the open, high, low, close, right? So it closed above this bullish engulfing, closed above the open of it, and it retested this. Retested it, retested the open of this. You go down on a daily time frame and look at that. It's beautiful. See how market reject 1, 2, 3, 4 days, 5 days, bottomed out 1, 2, closed above this little thing zone right here, and then it retested the open of the month. See, it retested bullish, bearish, bearish, bullish. See, it broke it. It retested bearish, and then next thing a bullish. My bad. Bullish engulfing pattern. Bullish engulfing pattern indicates it retested this successfully. It was total 100%, and next thing I know, I entered right here, and then it went up 103 pips. 103 pips, $1,003. Simple risk management. Daily chart. But entry right here, stop loss, few pips below. Possibly the next candle from over here. Stop loss right there. Boom. Count 103 pips. Entry. You would have took the entry right here at the, and then you still would have made profit. And then it retested. You can see it retested it again. Wicks, rejection, rejection. I'm telling you guys, this is a surefire way to catch reversal patterns and break it down time frame by time frame. All right, that was on a weekly chart. Reversal pattern caught 103 pips. If you caught the retest from over here, entry, and then rolled it up to its high, it would be 237 pips. Or 2,379 micros, which is dropped to 237 pips, which is on a standard lot, $2,370. 10 lot, 23,000. All right, and it's on a daily chart. It took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 days for that to 12 days for that to play out. Yeah, so that's what I would like to go over. Next candlestick pattern I would like to go over is bearish engulfings. Bearish engulfings, a perfect example would be like right here. Perfect example. All right, we see market makes a low, a lower high, and lower low, and a lower high. We can get into Fibonacci in another video to show you why you would take this trade with extra confirmations. You can see over here structurally it's closed, made a low, and then found rejection right here, but it didn't break it because and then over here it found resistance right here with this zone. All right, and then a bearish engulfing, indicating bearish momentum in the market. A huge bearish candle means huge bearish market, and on a daily chart, that's a day of bearish market. So when it broke this monthly, support, which is now resistance, price pulled back to this line, and then you would have entered because it didn't break it. So I'm gonna just highlight this area actually. I'm gonna highlight that area right there and then go to the 4-hour time frame. This is how I'm just showing you guys. 1, 2, 3. How you would have caught this trade. All right. See, this right here was a bearish engulfing day. Price week opened up took out the low. We're open with a bullish engulfing. See, this low right here, this daily low from this wick right there. Actually, price this wick right here. That would have been a prime entry. From this wick, price teetered right here. I also I forgot this. Sorry. Use RSI as another indication or confirmation for a signal indicating divergence in the market. So right here we see that price went to the low, came up, back down, didn't break it, teetering, broke it, then closed with a bullish engulfing pattern for a buy. Entered, would have entered. You see that market is flat basically, but RSI was going. Market was flat, but the RSI was going in an uptrend, indicating an uptrend and a buy. Right here, this candle, bullish engulfing candle with a entry would have been perfect. The close of the bullish engulfing candle, and then rolled it up. I can't make this stuff up, guys. It does this every day in the market, every week, every day, whatever you want to do. It went up. Let's see, 100 to resistance, 108 pips. They would have caught it for the full thing with 126 pips. 126 pips, guys. This is a 4-hour chart. Divergence, bullish engulfing, didn't break support. Bullish engulfing, indicating bullish engulfing. Next candle would have bought, retest, buy. How I would have caught this on a lower time frame. On an hourly chart, let's go back. I don't got time. Well, I got time, but it's irritating. All right. So, like I said, price was teetering right here. Price was teetering. Whole entire time, price was teetering. Basically, price was going in a bullish trend, but price made it low, lower, high, lower, low, lower, high, lower, low, broke it. Bearish engulfing, mini reversal pattern, and then a bullish engulfing broke this little area right here, indicating strong buying pressure. I'm gonna go over how I would have got extra confirmations for this trade in a later video, but right now this is just candlestick analysis and going over price patterns like bullish engulfing, bearish engulfing, twister tops, morning stars, evening stars, rejection bars, price patterns, squeeze, all that right now. So sorry for ranting, but sorry, my kid was doing something. So retest, bullish engulfings, always write this down. Bullish, every time a bullish engulfing paints on the market, at whatever time frame, it always pulls back. All right, the next candle, two next candles after the bullish engulfing, it always retraces or pulls back to find support. That's the retrace, the pullback from the bullish engulfing, the pullback. You want to catch that. That's your entry for the push higher. All right. If you didn't get that, I didn't feel like writing it down, honestly. If you didn't get that, rewatch the video. So like I said, entry, this candle would have been my entry right here, pullback. The open, high, low, close, entered, buy, boom, 130 pips. 130 pips. That's how I would have caught the trade. If you know market structure, how to identify a trend, higher lows in an uptrend, higher lows, higher highs, higher lows, higher highs. In a downtrend, it's high to low, lower high, lower low, lower high, lower low, lower high, lower low, and then yeah, that's about it. You would have added on confirmations because this painted a zone. I'm gonna go at it in the next video. Whatever next video I post. But this video is basically going price patterns and how you would have entered the market on a higher time frame. And this is a daily time frame. This was a daily time frame on what I saw from this bearish engulfing. Like I said, this bearish engulfing day, price bounce report, entered, rode up to the resistance, and prices teetered. Next, I want to go over tweezer tops, tweezer patterns. Let me see if I can find a nice tweezer pattern. I know it good as, excuse my language, it's on YouTube, you can't, whatever. But a nice tweezer pattern would be people call them tweezer patterns. I call them tweezer patterns. People call them perfect, right here. This is in my face. This right here is a tweezer pattern. This right here is a tweezer pattern. That right there is a tweezer pattern. All right. Tweezer patterns, tweezer tops, tweezer bottoms, tweezer tops, tweezer patterns in general indicates it basically indicates a level of support or resistance that hasn't been broken. Okay, so if like you can clearly see, if not, I'm gonna draw it out for you, from this low wick right here, from this wick over, you can clearly see that price was in a downtrend. Lower high, low, lower high, lower low, lower high, lower low, or low, because it didn't break this low, so it's another low. Lower high, lower low, but bullish engulfing, close higher than this bearish engulfing, close higher, bong, entry, next candle. Entry, next candle. If you missed that, you would have got in a retrace right here, bong, entry, and rolled it up. 120 pips. 120 pips. This is on a weekly chart. But you would have caught it. You would have caught this entry at the beginning of this week, which technically was right here, I believe. See the 8th. Today's the 8th. So yeah, this week. Yeah, so this week opened actually. This week opened right here, and price retested this other week's low, double bottom, tweezer bottom, closed bullish above this right here. Also broke a trend line, which I'm going to go over trend lines in a later video, but right now I'm showing you price patterns. Tweezer bottom, tweezer top, tweezer bottom. There's a bearish engulfing, bullish engulfing pattern right here. Closed above, double bottom, 1, 2, 3, broke a trend line, 4. This video right here, this is right here, 120 pips, 120 pips, 120 pips, standard lot, $1,200. 10 lot, 12,000, 12,000 in a week. 12,000 a week, guys. What can you do with 12,000 a week? 12,000 a week times 4 weeks, that's 12, 24, 36, 40, 48,000 in a 1 month. 48,000 1 month. Make 40,000, 48,000 a month, guys. This is a $5.3 trillion a day market. Next, its possibilities are endless. Right now, next price pattern I'm gonna go over is a bullish or bearish rejection bar. I'm gonna show you right here. Perfect, 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 perfect bullish and bearish rejection bar. There's 2 of them right here on this level. I'm gonna show you. I'm gonna draw support first on this wick over this wick over like that. All right. Price found support, support, support. Didn't break it at all. Formed a bullish rejection bar right here. That was my original entry for this move down originally, but since I didn't held and got scared, I missed out on the move. I caught it, like I caught the move originally for what it's worth right here. 173 pips, but I'm gonna show you why you would have took this move right here and caught this whole move down, because of this higher time frame, 4-hour time frame price pattern. See, price made a high, and to help you out, you can see that price is making lower lows, but it's not breaking this support right here, right? Bullish rejection bar, a bearish rejection bar also. Wait. 1, 2 bearish and bullish rejection bars. These are just rejection bars to the upside, right? Wicks, wicks, wicks. From the previous candle, he opened high, low, close right here. An entry at the bottom, but it got in right here. This wick indicating a zone of supply. It entered on a sell or break of this, and also it's above this. So bullish engulfing right here, but price is failing to push higher. See, it's failing to break this high. It's failing to break this high here. You see, it wicked it. Didn't even go up touching it. And then right here, I forgot what it was, either New Zealand or something, but when this on a 4-hour time frame indicates downward momentum in the market, you want to enter this. This is when it's not breaking support. I mean, not breaking this range right here. This range was a 64 pip range. It wasn't breaking this range at all. Then to get a better entry, you would have took the middle originally, like that. If you want to be technical with it, but me, I would have took it like that. Excuse me. You see that price closed below and didn't even close above it, or you kind of support. So resistance, middle part resistance, rejection bar, higher time frame, above monthly support, and then it broke it with a bearish rejection bar. Bearish, it showed bullish rejection to the top. Bullish rejection to the top. 1, 2, a higher time frame. Can't make this up. You can back test this strategy all you want. Uptrend, just draw it out for you. Price patterns right here. Boom, boom. 1, 2. Break, support, close below monthly support, and drop. And it dropped for 232 pips. 10 lot, 23,000. Guys, I can't make this stuff up. Patterns, you can, I'm gonna just draw one out for you clearly. Draw one out for you, clearly marked up. This is an ascending triangle where price makes low to high, higher low, and just retesting the highs is what I call an ascending triangle right here. Resistance, resistance, resistance. Price is showing divergence, but it's making higher lows, but it's right above the 50 on the RSI. Found support. How I would enter this trade on the high lows. You see that price isn't breaking this resistance right here. 1, 2, 3, 4, and it rejection, buy. Would have bought at the resistance, support, buy at the next higher low, which is right here. Stop loss below this, 5, 10 pips below this. Entry went up 124 pips. Guys, 124 pips. I would have took the entry honestly on the H1 time frame. Scroll back, but I saw that price is high. 1, 2, 3, 4, 5. It's still respecting the counter trend. We already know the trend was an uptrend. Following trend, price patterns, confirmations. Entered. Would have definitely entered right here on this bullish engulfing because it broke this previous. It broke this previous lower high right here. It brought right here. We bought right here. Stop loss below this wick. Buy. Bullish engulfing, retracement, entry, buy. 114 pips. Guys, I can't make this stuff up. That's I went over bullish engulfings, bearish engulfings, evening stars, morning stars, tweeters, rejection bars, support and resistance, how I mark up top down analysis, higher time frames, price patterns. It's one, and that's that. Recording will go up on my YouTube channel So be lookout for that. Forex risk management. Look out for price patterns. Be consistent, day-to-day basis. Know your patterns. Know your price. Know how to trade. And yeah, that's basically how you guys trade the market. The market does this every day, every week, every month, every year, every second, every minute of the day for 5 days a week. 5 days a week, 24/7, $5.3 trillion a day. Yeah. So this is Alex signing out. Peace. See you guys on the next video.
Easy go.